Hey everyone. This week things are a bit complicated, and because of that, I'll do a two-parter. First one is this one, which will be an sector ETF review, and then I'll do the regular weekly update. And this is because maybe it gives a bit more clarity about what's going on. Things are not clear at all, even to me, and let's get going with it. So first off is XLE. This is the all-time high from 2014. And on top of each review, I did each sector divided by SPY, and you'll see why in a minute. For XLE, this was my prediction from the beginning of the year. Let's do weekly. Basically, it was something like where where was it? 23, 24. Basically, it was if this holds, uh, it was like this, go here, or if this holds, we go all the way up. And we got the bullish outcome, which I was feeling confident in. Now it's a bit dicey. Like we could definitely see this. Why? Because as you can see, this is a major level. We've been building an ascending triangle towards a breakout. And while that breakout is still in the cards, something like this, and eventually goes like this. But we have a close on the weekly basis below this line. Monthly could be saved, but this is not a good look for a monthly. Like you don't want to see this type of weak rejections on the monthly, especially after having a close above the line, got strongly rejected, closed right at it, and now we're showing continuation down after once again trying to go up. If we save it by the end of next week, meaning we do we have a closer on here like 93.3, then this is still fine. Like maybe the breakout holds. Other than that, we could see continuation down and retest of the trend line here at 84. Potentially even go lower, like depending on what happens on the macro side. But this is only one side of the equation, and this looks bullish on the daily, on the short term kind of thing. But when you look at XLE versus SPY, see that we had a brief, basically XLE started going into a bull market after the 2020 crash. And it's been going out up for a while. We peaked in 2022 on the ratio side, but now we're building a huge bull flag. And we have a lot of room to go down. We had this trend line here, which we closed below. Same kind of look, meaning we went to it, closed below the week, no, on Thursday, and had a rejection, tend to go higher and rejection on Friday. And on the weekly, close below it, monthly, same kind of thing. We may save it, like the daily and weekly won't matter if by the end of next week we close like 0.17 here. But that this being said, I don't think the bull market is over. I think this is a huge consolidation that will eventually resolve bullishly. Even if we were to do something like this, eventually we will go up, we break out, and this should go much, much higher. This type of consolidation is basically we're gonna double this range. The minimum we should see is for this ratio is something like this. Retest of this level. This was an overshoot, we went below it. Retested, backtested, went below. So the minimum we should see is like this 0.23 ratio when we break out, but most likely we go higher. And you can see some consolidation here as well. So this was the rejection area. If we go above this, much higher, like this 0.46 kind of thing. So longer term bullish, short term, I can definitely see it going lower. It depends what happens. I like the look of oil, meaning it kind of Colgate. Surprised to the downside this week. I didn't expect it to go lower, but Friday put in a good hammer candle that might make a low. It's kind of undecided, making a broadening formation here, like this, and it's sort of macro deciding, like it can go higher, get rejected again, go back lower. Like it can do this a couple of more times, like one or two more times before finding direction, probably from a macro event. So it's I was wrong about it. It's not bullish. This goes out of the way. Or it can only happen if we do a breakout after this broadening formation to the upside. Otherwise, but we can also do it to the downside. But until we get certainty, expect it to chop in this range. Okay. Then next, XBI. This is the all-time high AVWAP. Got rejected, went back below it, then went back below the horizontal level. Um, and it was short of building this. I assumed we would retest this trend line and potentially be bullish afterwards. I'm not so sure anymore because the potential for uh, a bigger pullback. The thing here is we are way below the all-time high, and this the ratio between XBI and SPY doesn't look like a bottom to me. Like there are some hints that it may have bottomed, but it will have to bounce here and go higher. Let's say something like this. Maybe I'm using the wick here, so I'll use the wick in the other side as well. So let's say at most something like this. And then eventually it has to do a horizontal breakout. Yeah, this is good. Major level here. Maybe a bit, make it a range, not a single level. Come on, man. So potentially a major bottom here, but I'm not so sure. Like I can see it going for a retest. This is a accumulation range, not a classic structure, but we could do like a spring here. Something like take out the lows or just retest the lows like here. And then I would be much more confident that a new bull market starting in XBI if this sort of thing happens. You see same kind of approach in XLE when it made a new uptrend and eventually broke out of the range. And when it broke out of the range, it went full bull vertical. This is kind of the thing you want to see in a new bull phase, but you need several confirmations that the uptrend will hold. And for XBI, we have it and we don't. Uh, that's why next week is crucial. Next week could give us like blow off top kind of move in everything, or it confirms the weakness that basically everything is showing except semis, and we get this type of capitulation in individual names or things that have been underperforming. The mega caps to like 20%, 30% pullbacks. No, that's too much. Like 10, 20% pullbacks. And then we actually start on a bull market. Or, I mean, a broad bull market, not this. Okay, next, XLV. XLV looks interesting, right? Like we just had a all-time high breakout, I think. Yeah, yeah, all-time high breakout. But then when we look at the ratio with SPY, well, not that bullish anymore. So it's been underperforming broadly against SPY. Is building this broadening falling wedge which is actually pretty bullish, and we are at the bottom of it. So I would expect we get a bounce soon. This is the weekly. So within the next month or so, I would expect we get a bounce. Maybe could see like a capitulation move where the wick goes down, but we go down and then close above and then start going back to this trend line. Eventually, maybe we get a breakout here, but I would expect we go all the way to the top. So XLV looks like a good bet moving forward as soon as we get past this weakness here. And on a that's a on a relative basis, let's call it. But on a actual move, this would be much harsher than it looks. Like all the way to a retest here. So from what's now 144 to potentially a 130-ish, let's say. That's a big drop on the short term. But if you have patience and wait for the breakout, this should go a long way when it goes up. XLK. So XLK is the one with the tech names. So it's at all-time high. The ratio doesn't look that good. We're kind of at an exhaustive state. Let me draw stuff. So let's say we had this range, we doubled it, clicking stuff well today. We doubled it, it became support. So it tried to break out a bit and got rejected initially, pulled back a bit, broke out again. Now it made the support, and then we double it again. And where did it stop? Almost example at the not exactly, but it's not this is double. It's about there, 423.034. I was 0.22, almost there. But anyway, so we have this triple range. The mid is now this. So if I were to draw something like this is the mid, like I said. I eyeballed it well. So yeah, basically this. And it's showing relative weakness, meaning XLK itself made a new all-time high on the bearish divergence. Ratio, new low, so it's been underperforming, new higher low, and volume declining on this rise. Volume declining on this rise. Volume has been declining in the market in general. So that means less liquidity. That means less volume is needed to move price. If there is little opposition and the momentum is bullish, this is quite bullish. Like it can go up a lot very quickly. But if for some reason this turns, it's extremely bearish. So what I would expect here is at max the push higher, but I think this looks topped out on this horizontal level here and on the ratio side. And the thing we need to look out for is a break of the uptrend. This is kind of a classic pattern. It's a head and shoulders, shoulder, shoulder, head, goes down, tries maybe one more time to go up. This is too long. Like this, then, and then it goes all the way here again. On the actual name, kind of like this. And we have the topping candle here. Expected to do something like this, like go sideways for a bit, another couple of days for sure. Bam, bam, bam. It goes down. Then we have the horizontal level. Let's say it's here. Not here. Contact, 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 and contact here. So it goes sideways for a few days. Then it loses this. It backtests. Then does a bigger move down. Does a short-term bounce but makes a lower high. Goes below. Backtest, and then it's goodbye. And all of this sort of like this. So it's bullish until it's no longer bullish, and then it's a complete rug pull, and it's all over. And we get a couple of milestones, probably one here, something like this. The target would be here, so 182. Let's do one more thing. Yeah, seems about right. So somewhere between this low area here and this high. I think all the way here. So somewhere in this 166, 182 area. As an uber extreme move would be this. 61, 165. Then XLU. XLU uh, had a bit of a resurgence. When we look at the long time chart, it it's been dumpstered, like this topped out in 2009, and it's been in a bear market relative to SPY since then. It looks like it had a capitulation. Like I'll do monthly, draw a trend line here, like this. Yep, and upper one is like this. So this looks like the bottom to me, meaning it broke the uptrend, then recovered and did a bit of a rally. But just like everything else, the uptrend needs to be proven. So the uptrend needs to be proven first by doing a trend line retest, which would be this. And as you can see, it has a bit of room to drop, like it's 1.13.5 now, and it has to drop to 13-ish, 12.9. Uh, I would assume we see quite a steep drop. Let's draw it like this. Aligns with this level ish. Say this a bit lower. Not include the wick here. So this is my assumption for the XLU pullback. Like it's 71, and it should go to 66-ish to do a first attempt to get out of to maintain the bull market. Something like this. But I'm pretty sure this has bottomed, and XLU will do decently well moving forward. Consumer staples, almost at all-time high, but when we look at the ratio, come on, this looks dumpsters as well. Let's do the monthly. We are at 2000 crash levels of underperformance for staples relative to SPY. And this is not really that good. uh, and it means a lot of room to go up. We have a bullish divergence here on the monthly, like this made a downtrend and this made a small uptrend. Not that big, but still visible. And it's been doing this on the last drop. This is on a signal signs of accumulation. Now it's doing most likely a last pullback, and it will go up soon from a ratio perspective. So this one, like XLU, looks like it will have a resurgence soon, something like this. Uh, could go all the way to test the trend line, but I think it bounces afterwards. And let's do it like this. So yeah, and again, let's look at XLP. At resistance here on the horizontal range, didn't close below it or barely close below it. But if it does, then it's quite possible that we see a retest of the low area here, and then we get a bounce and eventually breakout. Or we could do like ascending triangle. Let's like this. Is this okay? This probably more like this. So that's a possibility. The other one would be something like an eventual breakout. Two more discretionary. So XLI, this was the top. If there is one thing that signals a bull market is XLI, because this is consumer discretionary, meaning stuff you don't need to buy, but you want to buy because they're like luxury goods. Uh, Tesla and Amazon are the biggest names in this, meaning Tesla cars are luxury goods, and Amazon basically random shit that people buy. That's Amazon. And when Tesla and Amazon do well, XLI does well. So they're kind of like the state of the consumer discretionary. Consumer staples do well when, especially in recessions, because they're always things that people buy, like the uh, essential stuff, like food is in consumer staples. But XLI is consumer discretionary, meaning discretionary items that people don't need to buy, but they want to buy because they make the quality of life better or something like that. So when XLI does poorly, is general a bad sign for the economy. And you might say that XLI has been doing well here. Like we are not that far from all-time high. I'm assuming this is mostly on the back of Amazon. If Amazon wasn't in it, it would be much worse. But when we look at the ratio, holy shit, it's in dumpster level and potentially threatening to make a new low. And I think it's quite possible this makes a new low. And when the new low comes, it's gonna be a lot of room to drop further. Like it would look something like this. Not a lot of support in this area here. There is some, but in general, it should go through it very quickly. If we are to have a new leg down, I don't think it's going to be slow. It's gonna be something like this. So another leg equal in weight to equal in size to this, and we get about this area. And I think this is another 13%. And you get the idea. So we we have a bull market that isn't a bull market. Like since 2008, this has been going up like crazy. We topped out in 2020, 21, and then it went downhill for quite steeply. and got a bit of a bounce. First one, second one, and now we have a low retest. Maybe we bounce, maybe we don't. To me, this looks more weak than strong because the candles are full body. Like we're not seeing any type of rejection like here, like we did here. This one came as a strong bounce without any notice, but maybe again we would have to see like on a weekly basis, on a daily basis, got a bit of a rejection, got continuation up, and so on. Now there's nothing. Like I don't think this will bounce without a pause at the lows. And to do this kind of V recovery, there has to be some extremely good news for the economy and in consumer sentiment. So this looks more likely to break down than to bounce at this level here. It looks more like a capitulation, like we lost the lower trend. It was looking good until it wasn't. And you remember this type of drop, meaning when things have a bullish setup and instead of going bullish, they become bearish, the drop becomes huge. I think Starbucks had a similar setup, uh, not on the mega dump, but oh yeah, here. It, before the mega dump, but like this. And I don't mean this candle from earnings, I mean this one. Let's look on daily because it looks better. So it had a bullish setup. I had been following this for a while, but when I saw that it kept getting rejected here, not making an attempt to go higher, I switched and said that I think we dropped to the 84 area, and this is what we did because uh, time is not on the bull side when this type of setup doesn't quickly resolve bullishly because it's showing potential for strength, and instead of realizing that strength, it's just becoming weaker and weaker, and eventually the buyers will go away and it dumps. And XLI is giving me the same kind of vibe, or XLI versus Pi. So this was supposed to be bullish, falling wedge, and then it kept dropping, didn't even try to go higher. Like all the candles that want to go higher were weak, and eventually it drops and makes a new leg down. And now we are do or die basically. If it doesn't hold here, it will mega dump. Next, industrials. So industrials have had a big breakout. Let's cut some of this. They went nearly vertical. Oh, by the way, this is something very similar to what I expect to see in uh, utilities. Like kind of they did a fake breakout, broke down, held on a trend line, and then go up. Same for staples. XLP on the daily chart. Going back to industrials. This. Did I dodge the same line on? XLP. Now I have the idea of mapping XLP and industrials with a delay because this seems like the exact same chart, but utilities have a delay and XLI is the future basically, is utilities in the future. See how similar they are? But utilities are basically here and they are to do this, the trend line will hold, and then they go nuts. Yeah, okay. So moving on. Major breakout, we kind of reach our target. So we have the double up target, basically this. Haven't quite reached it yet, but not far from here. So we have 129, 130 as the target. But major bearish divergence, equal high, and this type of divergence rarely fails. What can fail is it doesn't mean it goes here directly. Like you can do something like this, drop here, go back higher. Like it doesn't mean uptrend is it's lost. A bit. It's the all-time high, so doesn't have history. Only this and here. So let's say we bounce here, and if we don't bounce here, we bounce here, and then we go to do the target thing at 130-ish. That would be the top, like this, something like this. Make a new trend line, that would be something like this, and potentially top out here and retest this one, but that would be a bit later. Speculation. Any reason to believe this? Yes, like this. So this makes sense. I'll keep it then. Averages. Oh, 200 MA. So basically we'll bounce on the 200 MA. This being said, it's still bullish longer term. Then let's look at the ratio. Wow, in spite of XLI going full retard and retard bull and doing a mega breakout, the ratio went down. Unbelievable. It's uh pretty big moment here. I'd say it's in a bull market. Like this is a correction from 2020, just like XLE. It's in a bull market, but hasn't done the big move yet. This is the huge resistance on the ratio level. And we are building to taking this out. So how does this ratio improve? Let's say the market goes in bear mode and starts dropping. Material stock should, even though they should drop less than everything else. So on a relative basis, the ratio improves even though everything drops. So should hold here, then it goes up, does a retest here, maybe gets another rejection because it's low as fuck, eventually goes out and eventually goes vertical. When was the last time it went above? Let's do weekly. In general, when it goes through this or when it bounces here, it goes up very quickly. But should not assume that it will. Yeah, this seems pretty legit. And I think a drop is coming. It won't be that significant. Target will be this 115 area. Material. So materials also lagging to industrials. Looks like a breakout, horizontal one. Held here, sort of. Place these lines. It's pretty bottomy here, meaning went below this level, recaptured, and now it's in progress of bouncing on the ratio side. It should do something like this. Let's say another overshoot down to here. Even if it goes lower, it's very likely that it will have a bullish divergence. Looks pretty good, this one on the ratio side. Need that. So first of all, not sure if this breakout will stick, but it's still bullish even if it doesn't stick. Any levels here. So if it doesn't stick, I would assume a pullback to this trend line or this horizontal level. You see how it likes to play in this range here, sometimes overshoot, sometimes not. It wouldn't be that bullish if it goes back below this level, this upward up level, like does this. This is not bullish. I think if it does this, it will go back to the trend line. But even if it goes back to the trend line, eventual breakout and should go much higher. Is this new all-time high? Yes, it would be. 120 looks like about the right target. Okay, real estate. Monthly, weekly, daily. So this one in a while. So horizontal range as well. Blah, blah, blah. It's okay, yes. And then the midpoint where it's exactly now. On the 200 MA. This looks pretty weak. Like it will go below the 200 MA, does another fake out, and then the week of distribution accumulation range has its spring, and then it goes hard. Let's look at the ratio. Holy shit, this is dumpster level shit. This looks ugly as fuck. We have a we went below the trend line, backtested, rejected, not strong at all. Same kind of logic as I explained before. We have a falling wedge here, very tight one, and we are at the end of it, and it's not doing the bullish move. So it's not if it's not doing the bullish move, it's doing the bearish one. It did it a bit. Now try to get back above, got rejected, and it's dumping. So this looks pretty bad. So yeah, given what's happening on the ratio level, I would assume we get the bearish outcome. Why the hell were volumes so low this week? In theory, we didn't have such a bearish setup, not on this name, in any other name, and look at the volumes we had. Super low volumes across the board, and still we dropped a lot because low liquidity environment. A small amount of trading or shares traded moves the price a lot. Yeah, so my assumption would be we lose the 200 MA here, we don't bounce off it, and the bulls are in dire need of a bounce. The mega caps and Nvidia can only delay so long, meaning uh, if the rest of the market continues bleeding, at one point everything starts bleeding. It won't prevent them from dropping, just like it happened in 2021. Like basically, essentially the bull market stopped in November, and XLI, like I said, XLI is the bull market uh, indicator. When XLI goes up, and it did for quite a long time in an uptrend, things are good. When XLI broke the uptrend, meaning let's do like this. Okay, this is it. So this is the crash, and it was a quick recovery, so we don't count it. And it's been going on from 2007 basically. No, 2008. Let's say after the crash, and it's been going up and up and up and up and up. Broke the trend, and it was all over after that. We got a 20-30% correction, or how big it was, and the top of it was November 2021. Even though the crash, not the crash, the major drop started in January. So we had a 2 month delay relative to XLI. And look at what XLI is doing now. Eventually everything catches up. So yeah, they won't hold the market together for long. Telecommunication is Google. I don't know. Google, I think, is the biggest name. I don't remember who else. But this is sort of like tech, so that's why it's this high. Let's look at the ratio, and the ratio is much, 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 much lower, and looking to turn back down. And I'll put the weekly here so that you get the idea. Say this week, one rejection, another rejection, another rejection, another rejection, another rejection. So every time it tries to go up, is getting rejected. And look at this. Look similar? Like this, it never closed above that level. Now let's say this, it never closed above this level. And getting every time it tries to go above on the ratio, it's getting rejected. So what came after? This came after. XLF. XLF in a bull market is 209. Hasn't really stopped. Let's look at the ratio. How the fuck is this even possible? So 209. Let's say that if we ignore 2000, the crash, it's been going sideways. Well, anyway, it's at the top. Try to close above. Actually, it's this. It was on the monthly. Monthly is actually this. So never closed above this level. One rejection, second rejection, third rejection, fourth rejection. It didn't even go that high. Now we are above this level, but rejected, try to recapture, and now we are waiting for resolution. So if XLF goes back below 40, it's very bearish. Bearish, similar to how it was here. The ratio size side doesn't look that interesting. Looks like a pennant here, but no direction. If we close above the trend, below the trend line, we probably go all the way down to 0.71. And that would be the expectation here. We have another week of the month. It will be interesting to see how this month closes for XLF. If we continue dropping and we close at below 40, that would be pretty bearish. Like it's gonna be a second rejection, close for the first time above, then rejected, and then another one rejected. If we close above this level, it still has hope, and we shall see what happens. Sorry about the noise if you guys hear it. Okay, Cree. So broke out, back tested both the horizontal level breakout and the trendline breakout. Question is, will it hold? This is okayish. Interesting that regional banks are sort of bullish, but if this becomes a fake breakout, this is extremely bearish. Like it's probably going back to 40, 45-ish, something like this. But if it bounces, just as bullish, at least to 56. ARC is a dumpster fire. Ratio kind of the same. Ratio is in the low area and building a bullish divergence. Most of ARC is Tesla. Most of the reason for underperformance is Tesla as well. This might actually be bullish on the ratio side, like it is trying to hold. It hasn't made a new low yet. It's holding these lows here. Breakout would be pretty bullish, and that would mean XLI would go up as well. So it would be a hold on XLI. This, on the other hand, is a pennant, and we're getting close to a resolution on it. No bias. We shall see. From the ratio, it looks like this will bounce. From this, it's inconclusive. Inconclusive slash bearish. Back below this horizontal level. It's not that bullish when it goes above the horizontal level, and it's kind of struggling, like it wasn't an immediate recapture. See, like bounce, it goes back to the highs. Loses it, goes lower, then back to and rejected, got rejected here, and went lower. So if this resolves to the downside, it would be probably a minimum of this, but more likely this. But the ratio looks better. Problem with this is if it doesn't resolve bullishly, this will be another mega level dump. This would double the range. Let's say this. This will be the target if it doesn't hold here. Major breakdown. Another leg down. Maybe on the stock itself, it would be like a retest of the lows here at 30. Potentially even a bit lower. Definitely below 30. Okay, SMH. First thing, bearish divergence. I don't remember when I drew this target, but I drew it at a point in time, and we are nearly there to 48. I like this trend line, this one as well, but we don't care about that one quite yet. Let's look at the ratio. So equal high, and the stock itself is newer high. To do a couple of stuff for this one is more complicated. This is it. This. This. So this was a big overshoot, got rejected strongly, went below, did a bigger correction. Now we are here. In theory, it should not be able to overshoot as much. Second attempt is always weaker. And when we retest, we should retest the midpoint, which would be confluent with this. Yes, something like this. The other part is unknown. So let's just say like this. Potentially like that, and but also potentially like this. And the trend line would probably be, let's do the same thing. Yeah, like this. This is fine. There we go. Bit higher, like this. Say this is an overshoot. And we went above again. Doesn't look that strong to me. And target would be 205, 2010. Just below 2010, probably. Let's go on a parallel channel like this. Line up that well. I want to line up the midpoint somehow. With this one is A bit too low, but if I go this one looks better. We have contact on multiple points. Maybe actually I should bring it lower, like this. So you have contact with this overshoot, 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 contact here, contact here, contact here. This is an overshoot range, and it went below, then it dumped. We have an overshoot to the downside here, then contact, and it's begging for a contact on the lower side of this range. The next time SMH drops is gonna be big in my opinion. $200 target, which would be the horizontal level. Pretty spectacular double top. Not that happy with it. This would be lower. This would be higher. Something like this. Anyway, playing around randomly. Okay, so this is it for the ETFs, and I'll do the week review. But to get the most out of this one and understand what's going on, you have to look at that one at this one as well. So have a good one. Bye bye.